Thank you very much. And what a ceremony to kick off the afternoon sessions. And so now, after lunch, and given we've all just eaten and we want to move around a little bit, we're actually going to be splitting the forum across this room and another room just off the side here. And so we're going to have multiple breakout sessions happening at the same time. We will hold 2 sessions within here, which will be breakout 1A and 2A, and in the auditorium just over on the right here will be the other sessions that will be 2A and 2B. I believe my colleague Yasmin is just over in that corner. So
hi everyone.
If you want to join those sessions, yep, over to you, Yasmin.
Just making sure. Selamat siang, bisa dijawab dengan semangat. Selamat siang. Wonderful. I think the energy is still in the room, George. So if you'd like to join me in the auditorium, well, we have 2 scheduled panels, one on inclusive value chains, followed by a technical panel focusing on strengthening legal and financial systems. If you're lawyers, bankers, investors, you want to be in this room with me, trust me. Alrighty, George, I'll see you after the networking break.
Fantastic. Thank you very much, Yasmin. And so here to confirm, here we'll be having the panel on enabling the shift, reimagining policies in capital markets, and the infrastructure panel that will be on financing the real economy through inclusive climate-smart infrastructure. But before we get into the sessions, we just have a quick video on the inclusivity of the Orange Movement. So if we can play that video and enjoy.
What if the global economy left behind the world's largest untapped market, over 1 billion people strong? Across the world, people with disabilities are building businesses, teaching, coding, and creating. Yet the systems that shape finance and opportunity often don't see them. When inclusion is missing, potential is lost for individuals, for businesses, for economies, creating a $1 trillion gap. Disability inclusion isn't charity, it's an investment. Companies leading in disability inclusion earn 1.6 times higher revenue, 2.6 times higher net income, and 25% greater productivity. Recognizing this potential, IIX Values has embedded disability inclusion in its digital impact assessment and last mile verification to measure inclusion in a way that is practical, credible, and aligned with global standards. Built on inputs from inclusion experts across the globe, our platform assesses themes such as hiring, governance, and accessibility, verified through inclusive surveys via email, SMS, and voice calls in 18 languages. We work hand in hand with communities of persons with disabilities to test features. Ms. Dien Viet An of the Vietnam Blind Association shared her experience.
We saw a very, very strong match because both of our organizations believe that everyone deserves to be heard. While the traditional written form surveys are normally difficult and time-consuming for the blind people, and those who cannot use computer or smartphone are excluded. But with IIX Voice Hall, we feel very confident and we can use our phone to participate independently.
Inclusive measurement is only the beginning. Through the Orange Seal, we unlock new markets and mission-aligned capital for organizations championing disability inclusion. One such inclusion champion is Hear Me, an Orange Seal certified inclusive services provider for deaf individuals in Indonesia.
Hear Me is committed to empowering the deaf community in Indonesia. We provide education and job training programs while also raising public awareness about inclusivity. We believe that every deaf individual has great potential as valuable human resources. Therefore, we strive to create an inclusive and safe space for them to grow.
Hear Me became one of the first inclusive enterprises in Indonesia to earn the Orange Seal and also raised $58,000 plus US in capital with IIX's support, strengthening its systems and expanding its reach to the deaf community. When inclusion is visible, it becomes investable, and when it's investable, it drives sustainable growth. If you're already an inclusion champion or are looking to drive new growth through disability inclusion, IIX Values can help you shape a future where inclusion drives performance.
Thank you very much. And I know that some of you have come forward into here as well. Please, if you're sat at the back, do keep coming forward and join us at the front here as well, as we're about to kick off our first breakout session. So our action as a collective is really essential to achieving the development we want to see in the world. Asia's sustainable finance market is now growing twice as fast as Europe's and the US's. And the region has so much potential as you see the capital flow eastwards. And so now onto our next panel, Enabling the Shift, Reimagining Policies and Capital Markets. So please join me in welcoming our panel, which will be moderated by Ms. Ning, Director of Impact Investing at AVPN, Mr. Amar Gokhale, Consultant of Women's Economic Empowerment at UN Women, Bapak Dirgantara, Ginanjar, Senior Advisor at the Organization for Economic Cooperation and Development, Ibu Dien Sukmarini, Senior Assistant Director of Capital Markets and Islamic Capital Market Development at OJK, and Ms. Oluwatoyin, Alake, Capital Markets Development Lead at IFC. Please, join the stage.
Okay, good afternoon, everyone. Thanks for having us here at the forum. So it's a pleasure to welcome you all to the panel, Enabling the Shift, Reimagining Policies and Capital Markets. I'm Ning, I'm the Director of Impact Investing at AVPN. So during my working closely with over 700 members from over 40 countries, including funders, policymakers, ecosystem builders, in mobilizing capital in impact in Asia, we consistently seeing how forward-looking regulation, strong capital markets, and ecosystem-wide collaboration can turn inclusive finance into a driver for productivity and shared prosperity. That's why I'm especially excited and honored to moderate this panel today, composed of leaders representing the most influential ecosystem enablers that drives the future of sustainable finance. We'll hear their perspective today, from setting national policies and regulatory frameworks to structuring innovative financial instruments and setting global investment standards. So without further ado, I would like to start the discussion now with Ibu Dien. We all know that Indonesia is the world's largest issuer of green Sukuk and now home to the largest orange bond and the first orange Sukuk globally. OJK, as the Financial Services Authority, played a pivotal role in catalyzing this progress. So could you walk us through the key regulations, incentives, and other forms of support that make all these happen? Thank you.
Okay, thank you, Ning. You know, afternoon session is a critical session because after lunch, everyone getting sleepy. So we have to make this session just interactive. Okay, thank you for the question. Yeah. In considering sustainable finance, I just want to start from how Indonesia commit to Paris Agreement, and then the government also set up the National Sustainable Development in National Plan in long term and also in a medium term. So OJK is a regulator for the financial services industry. We commit to support government to facilitate the raising fund to support the sustainability development. So in 2017, we issued regulation number 51, and through this regulation, OJK requires financial institutions, issuers, and also public company to implement sustainability principles. And also we require them to prepare sustainability reports and integrating ESG values in their business. And then at the same year, OJK also issued regulation number 60. There is a regulation on green bond. At that time, we only introduced green bond. But in 2023, we revised this regulation and we make broader scope. So we revoke the regulation number 60. And we issue the new regulation numbers 18 that we cover green, social, and then sustainability link, and also wakaf. And we accommodate social too in here. And this regulation allows flexibility. For example, just like PNM, when they want to issue orange bond and Sukuk, they can use this regulation because orange bond is under social category. And there's eligible social activity that are covered under these labels. And then, other than regulation, OJK also doing other initiatives, which is encouragement and promotion. Without encouragement and promotion, we cannot encourage the industry because this is new thing in Indonesia, and we collaborating with international institutions like UNDP, IFC here, my partner, and then ADB, and then IDX also for the national stakeholders. We encourage the industry to use thematic bond and Sukuk to facilitate their sustainable activities. So we deliver a workshop, we deliver promotion, education, and capacity building, and also we offer technical assistance. For example, we collaborate with the AGB and UNDP under accelerating program. We approach some potential issuer. We assist them how to prepare the framework, for the issuance, and also to assist them how to do the assessment for the framework, some kind like that. And then the other things, incentive. So this is the most important that the market player always asks to the regulator. And OJK already offered the incentives for green bond issuance still, but we will extend the scope. We will cover other instruments other than green, and also IDX. So OJK offer incentive for green bond issuance. It is a 75% discount on registration fee. And now OJK also will we will propose to the Ministry of Finance to get the incentive for other thematic bond and Sukuk. And also other incentive from IDX. IDX provide 50% discount on listing fees on green bond. And IDX also will extend other thematic bond and Sukuk, including social. And actually, other than the incentive, if there's a question, is there any incentive for other than green? But when we haven't issued yet, you can use other incentive, which is incentive for the Sukuk issuance. OJK provide incentive for Sukuk issuance. So if a company issue bond, they have to pay 0.05% registration fee to OJK, or at maximum 750 billion, while Sukuk only at maximum 150 billion. So it is 600 billion gap. If you issue Sukuk, it's much cheaper than issuing bond. So this can be used for the, for example, if you want to issue social bond, Sukuk, or orange Sukuk, so that's why PNM issue Sukuk more rather than bond. So that's all from me. Thank you.
Thank you, Dien, for granting us the regulatory foundation, capacity building, and of course the attractive incentives that make all things possible. So now I'm going to turn over to OJK's close partner, IFC, Olu. So could you share some of the examples of how IFC worked with regulators and market players through advisory and investment to expand the sustainable and inclusive finance here?
Sure, thank you very much for having me. For those who are not familiar with IFC, we are part of the World Bank group, but we basically focus on private sector. We provide investments, and we also provide technical advisory to support private sector access to capital. And capital markets are really, a very, very critical aspect of the way we do business. We believe that capital markets helps to mobilize long-term finance and move it, to where capital is essentially needed. Now, in terms of what we do, I think one of the critical elements of our work is really, leveraging with our World Bank colleagues to support regulators to build regulation. And we've been involved when it comes to labeled bonds and when it comes to, thematic bonds and capital markets generally. We've been involved with regulators not just in Indonesia, but across the world. We're a member of the ICMA, and so, all of the green bond principles, the social bond principles that are out there, we are, contributors to those principles. We also work closely with regulators to develop guidelines, and these are very, very important for labeled instruments, because essentially what you're saying is you're developing a separate regulation that really helps to shape the way capital moves. We've also supported a lot of regulators with taxonomies. Although, of course, in the social space where Orange sits, there are no taxonomies today, but in the green bond space, we have been very, very instrumental to supporting taxonomies. But I think the critical component of our work is really hand-holding the private sector. Because one, you can develop regulations for all you like. But if the private sector does not know how to leverage regulation to be able to mobilize and deploy capital, then regulation would not be used. And so I'll give an example of what we've done in Indonesia particularly. The first gender bond that was issued in Indonesia was actually issued by a bank called OCBC. And IFC was very instrumental to supporting OCBC. At the time, OCBC did not even have dedicated banking products for women. And this is a problem that we see across board in any country that we work. We find that while institutions, whether they are banks or they're in the real sector, whilst they have products, they don't have products that have taken into cognizance the role that women play in communities or the challenges that women face in communities. So sometimes you have banking products that do not take into cognizance the role of women. And so we worked with OCBC to even develop a focused product, a focused banking product that looks at women and the needs of women. And then we went on to support them, with respect to the issuance of a dedicated bond. And so IFC, just to catalyze the market, we came in as the sole investor into that bond, as a way of demonstrating to the market that, one, a bank can have an underlying product that is focused on women, but also a bank can attract capital from DFIs and private investors that would be focused on women particularly. And this is particularly important because I know when I have this conversation in Indonesia, people tell me, what do women need funding for? Why do they need dedicated product? A good example, I like to cite is in India, for instance, where just because of the social norms, women, you don't really find women have access to collateral. And so women don't have, when women would be, when you look at the housing finance product, women will be co-signatories to that loan. And so which means from a financial liability perspective, they are responsible. But when it comes to the title, which is what gives a woman collateral and power, a woman's name is hardly seen in any collateral. So what has really, shaped that market today is regulators coming out with a special regime saying to banks that if you finance women and you ensure women have either co-title or main title to housing, we would give you certain incentives. And so you are seeing a shift as well in India where women now have collateral. And you would agree with me what collateral and what housing mean is that a woman essentially has property. And that woman can go to the bank if she wants to start a business. And, she can actually say to the bank, because I have collateral, I can actually now access loan and I can have a business. And that changes the entire trajectory of, families, essentially. So this just building this fundamental building block is very, very important. And IFC has played that role, not just in helping to issue bonds, which is a role that we will continue to play, but really helping to build that fundamental of products and of channeling capital. And beyond that, of course, we continue to support capacity building, technical assistance. We partner with regulators to educate the market, to educate the industry about really the need to mobilize dedicated financing to women. But one last point I just wanted to make is we can't be talking about capital markets, deploying capital to women, without talking about capital market development in itself. So if you would compare, capital markets in this region, for instance, Indonesia's capital market, slightly lags behind, peers in developed market. So we should also focus on capital market development as well as we have this conversation. Thank you.
Thank you very much, Olu. So if the capital markets need to be truly inclusive, gender-responsive frameworks need to be embedded from the very start. So UN Women has been instrumental in shaping this agenda. So the next question is for Amar. Since your work sits at the intersection of policy, advocacy, and capacity building, can you share some of the initiatives you're leading in the region that strengthen the ecosystem for gender-smart financing?
Sure. Thanks a lot for that question. I think you referred to it very briefly that UN Women's work is quite multifaceted. So at the global level, we work across themes such as increasing women's leadership and political participation, women's economic empowerment, ending violence against women, engaging women in aspects of peace and security processes, and making gender equality more central to development planning and processing. So naturally, we work with governments and regulators a lot, but we also work with the private sector. Through what we call the WEPs, or the Women's Empowerment Principles, which are a set of 7 principles developed by UN Women and the UN Global Compact that offer guidance to businesses on ways to advance gender equality and women's empowerment in their companies, in their workplace, in their marketplace, and in the community that they work with. Coming to capital markets, I think UN Women has been galvanizing the capital markets ecosystem through guidance documents, some of which Olu referred to earlier as well, which were developed in partnership with IFC to enable capital markets unlock financing for projects and strategies that advance gender equality objectives. So be they the ICMA social bond principles, the sustainability bond guidelines, and the sustainability linked bond principles, all of which have been contributed to by UN Women. We actually also worked with the Luxembourg Stock Exchange to develop a series of case studies on bonds that were issued by various entities across the world to showcase what successful bond issuances look like. So further to this, what we are doing now is we are working with IAX to explore how can the women's empowerment principles be aligned or be used together with the orange bond principles and guide corporations to really issue bonds, issue orange bonds, and more effectively use the proceeds of those bonds to meet gender equality objectives guided by the women's empowerment principles in the workplace, in the marketplace, and in the community. So I'll just quickly mention here that I know we have heard from DFAT in the morning as well, but with funding from DFAT, UN Women currently has a program called the Gender Action Lab, in which we are working with corporations in various countries and bringing together a cohort of multiple corporations to help them, private sector corporations of course, to help them address certain specific gender equality challenges that they face within their business. And one part of this initiative is the Regional Systems Lab, or the RSL, where we are bringing together capital market stakeholders, so stock exchanges, securities and exchange commissions, to explore how can their influence and their mandates and incentives be used to ensure that, or to encourage more private sector entities to mainstream gender. So, yeah.
Thank you very much. Thank you. So actually, the next question will be to Pak Dirgan. So this is actually a truly exciting time for Indonesia right now because the capital markets involvement in sustainable finance is unfolding alongside with a major national milestone, which is the country's OECD accession. So how do you see these two agendas align, especially in terms of the capital market standards, frameworks, and the country's attractiveness to international investors and partners?
Yeah, thank you very much for the question. So, for those who are not familiar with the OECD accession of Indonesia, so Indonesia committed to the accession of the country to the OECD starting in 2024. And then within the President Jokowi time, it's carried over by the priority of the President Prabowo. So Indonesia now is the accession country that is going through the accession process until the 2029. So summer this year in June, Indonesia has submitted initial memorandum, which is a prerequisite for the accession process that is required for aligning more than 200 legal instruments. That includes investment, and trade, environments, and many other things as well. So currently, Indonesia now in the process of the technical review, in which the OECD, together with the ministries and the agencies, are working together for adjusting and aligning the policies. So it can be also like ministerial decrees, the presidential decree, and also the laws itself. So it is a rigorous process of 3 years, but there is a strong commitment from the country to actually deregulate the laws and actually make the countries eventually more attractive for investments. So there are many recommendations and also laws that is legally binding and non-legally binding, such as recommendations on SME financing. Actually, this instrument aims to maximize the number of SMEs that can access and use formal financial services at a reasonable cost and encourage national financial inclusion, strategies that include legal and regulatory reviews. And also there are recommendations on building financial resilience to disaster risk, which is also very important considering that Indonesia is a disaster-prone area. And also recommendation on financial literacy and high-level principles on financial consumer protection. So the process of accession usually takes many years, and this is a common practice. So currently, not only Indonesia is in the process of the accession, but also Thailand within the Southeast Asia country. And so Indonesia will most likely be the first Southeast Asian country to join the OECD. And why is it important also for the OECD is that now OECD is open for South-South movement. So Indonesia now is being a candidate of an accession country together with Thailand, but also in Latin America is Peru and Brazil. So it's very important now also from the OECD perspective to see how the standards can also be developed together within the South-South cooperation. And I think this is a very good movement, and Indonesia is committed to this. So we are going to have an extensive work on the deregulations, on open investment and trades and inclusive financing as well, that can actually help the Indonesia to, let's say, build the strong fundamentals regulations to be with the OECD. Thank you very much.
Thank you, Pak Dirgan. Actually, you touch upon a very key word, trade, which is connected to my next question to Kathy. So as you are developing the orange piece, how do you see trade factor into the movement? Thank you.
Good afternoon, everyone. Thank you. Hello? Good afternoon, everyone, and thank you very much, Ning, for the great question. Trade is a crucial enabler of the Orange movement because it creates the pathways through which the Orange capital can translate into the real economic empowerment. While the Orange movement mobilizes capital for enterprises which advance gender equality and climate change resilience, trade can ensure that these enterprises advance the impacts by accessing more markets, improving the competitiveness, and also integrating into the regional and global value chains. In Vietnam, IIX advanced trade policy reforms by linking them directly to the gender-smart and climate-aligned capital. We work very closely with the government of Vietnam agencies, including the Ministry of Industry and Trade, Ministry of Finance, and Ministry of Science and Technology, with private sector partners like Vietnam Chamber of Commerce and Industry, Private Sector Department Committee, and with regional platforms like the Regional Trade for Development RT4D facilities to develop and implement trade policy frameworks that not only open markets but also promote inclusive and sustainable growth. Specifically, we support our Vietnamese counterparts by improving the legal and regulatory system that rewards social and environmental goals while facilitating flows of trade and investment. By embedding sustainability, gender equality, and social impact provisions into regional trade agreements like the ASEAN Free Trade Area, AFTA, the Regional Economic Partnership, the ASEP, the ASEAN, Australia, New Zealand Free Trade Area, ASEFTA, we create a more enabling environment for social impact businesses, women-focused enterprises, and MSMEs to effectively integrate into the regional and global value chains. Together, these efforts help strengthen the sustainable financing ecosystem, mobilizing new forms of capital, encouraging responsible business practices, and more importantly, promoting the transition to a more equitable and resilient regional and global integration. Thank you.
Thank you very much, Kathy. Actually, I was just reminded that our time is up, but I guess the discussion will move on beyond this panel. So today's discussion makes it clear that inclusive and sustainable finance depends on connecting regulation, capital flows, ecosystem capacity, and trade. So the challenge is now how to carry this momentum into durable and system-level change, and every one of us can play a part in this. So now let's give our panelists another round of applause for all their great insights, and thank you all for the participation.